Peter Eliades with you on Stock Market Cycles update for Thursday, January 16th. I try not to get too personal in these updates, but I know some of you get interested in some of the background things occurring in my life. I told you about my accident last month. Now it's December 3rd it occurred. It was someone running a red light, and absolutely no fault of my own. Someone ran a red light, hit and ran the side broadsided my car, and had me bumped broadside into another car. My car was totaled, long story short, and I have to get another car. But I didn't tell you this one. A couple of weeks later, just about a week ago, drove my wife to the airport. She was going to see our grandson again in Phoenix, Arizona. We live in California. And I dropped her off at the airport, started driving back, and as I approached the intersection where the accident occurred, I don't know, I got a funny feeling. I said, this is really strange. Guess what happened? I swear to you, with this hand, I swear to you, I'm approaching within 50 yards of where the accident occurred. This little mutt dog, about 8 or 10 pounds at the most, came out directly in front of me. I had to slam my brakes. The guy behind me had to slam his brakes and miss me by no more than a foot. And I started thinking, because I believe so strongly in cycles, you wonder when things like this happen. But I have to tell you, I've been driving for more than 60 years. I haven't had any accidents. I'm not accident prone. I'm a good driver. So that's the first part of the story. Excuse me for, again, taking up the market time here. Today, I went into town. When I say go into town, it's a 45-minute ride from where we live, 45 minutes outside of Fresno, near the beautiful national parks in California. So, go to my haircut, get out of my haircut, start driving home, and it's raining out. It hasn't rained for a long time around here, but we started getting a little rain. It was raining pretty heavily, and I'm on the freeway, driving along. Traffic was slow because it was approaching rush hour. Rush hour here in the Fresno area, fortunately, is nothing like L.A. or San Francisco rush hour or New York City rush hour or any of the other big cities in the world. But it was rush hour, so traffic was moving along, and it wasn't really stop and go, but at a slow pace. I'd say the average speed was maybe 40, 45. I'm driving along, and all of a sudden, from out of nowhere, bam! From behind me. And, when something like that happens in such close occurrence, you say to yourself, man, there's got to be something going on. And you think of cycles, and I mean, is this that kind of a cycle for me in my personal life that those things are going to start to happen? I had to tell you the story because it just happened to me today, and it was extraordinary beyond relief that a person who is relatively accident-free throughout his whole life has now been broadsided by a hit-and-run driver, and his car totaled, almost killed the dog, and almost got backsided again with a car behind me less than a block away from where the first accident was. And today in Fresno on the freeway, a guy actually hitting me at about 30 miles an hour from behind. A young kid, I felt sorry for him. Really, really nice. We got out and exchanged information, whatever. Anyway, there we go. Let's go to the market. I love to look at sentiment indicators, but I don't make too many judgments based on them, simply because, you can see this. This, by the way, is from Dana Lyons, DANALYONS, who does tweets. So if you Google Dana Lyons tweets, you will come up with this and other charts that he does. He's an excellent technician. I love his work. He showed this, I think he showed it today, first time, the CBOE equity put call ratio, 21-day moving average. Look where we are. I can show you, I can put little crosshairs up on my mouse. One of these days I'll show you how to do that because it's a fabulous tool. And you can see that here we are. Today, the 21-day put call ratio went to its lowest level in 6 years and the third lowest on record. Now, you might say big deal, and it's not a huge big deal because look when it's happened before. If we go all the way back here, it happened right here. Now, this was a It wasn't a good time to go short the market, but the market actually went nowhere for probably about 5 or 6 months. So it was showing us that whatever increase, the strong move that came up to here, was most likely going to at least slow down, if not stop. Now, we didn't get a similar ratio until coming off the 2009 bottom. And you can see here again, it looks like there were a bunch of them right here. A bunch of daily ones, and it stopped the market. We had this huge move up. It stopped the market temporarily. We had a decline, another rally and a decline. Then once again in 2011, it looks like early 2011, we had a series of them here. We continued up for another, it looks like maybe several weeks, if you look at the scale here, before we topped out and had a nice little decline. And then the only other one we've had over the last 7 or 8 years occurred right here. And as you can see, I mean, we had a nice little decline almost immediately after that, but we continued to go up for probably another 6 months to 9 months, maybe even a year. And now we've seen it again. So does it mean get out of everything, sell everything, and run for the hills, and this is a market top that's going to last forever and ever? No, it doesn't mean anything like that. What it means is that people are very wrapped up in this market, and they think that we're going significantly higher. And who knows, we might go significantly higher, but chances are it's not going to happen in this upcoming time period. What this is telling us more than anything is what I have believed all along. We're not reaching a major top right here and now, but we're reaching a top that will see perhaps a significant decline. I don't think more than 10%, but if we have that, then rally back up into late, let's say early spring, late spring, and March, April time period, then we might have something working for us. So I wanted to show you this. And while I'm showing you this, let me show you a couple of other things that Dana Lyons came up with today that are interesting if you're Fibonacci fans. This is the NASDAQ composite. And Dana pointed out that today, for the first time, we hit the 1.618 retracement level of, I shouldn't say retracement, it's not a retracement, it's an extension. Fibonacci 1.618 extension of this decline from around September of 2018 to the big Christmas low we had in late 2018. If you measure this distance, multiply it by 1.618, you get this level right here, around 93.30 on the NASDAQ. Now, both the NASDAQ, and I'm going to show you this in Pcash too, but both of them reached those levels for the first time today, and it appears as if they went like straight through them. I mean, not dramatically, but they did not stop. Usually, if Fibonacci's are going to work, you stop real close to that Fibonacci number. That number for the S&P is 3308. And as you can see crawling on the screen above us, the S&P cash up here closed at 3316.81. But for the first time today, that 1.618 retracement was reached. So we show you those things quickly. What else did I want to show you? Let's take a look. I'm going to get rid of these cross bars here. Great tool, by the way. And let's take a look at this chart. I've been looking at different indexes and ETFs to see if indeed nominal 40-week projections had not been met there, and they are being met now. And this is one that I happened to put in yesterday. The symbol is RSP, and it's the Invesco S&P 500 equal weighted index. It's the ETF for that index. And look what happened. Just for the first time in the last day or two, we've reached the minimum side. This is very much like the projection we showed you that had been invalidated, but only very, very slightly when we came down here a couple of times and then shot up again, to the implication to me being that this initial projection was going to be reached. And now we're reaching it for the first time. Now, please don't start writing in your remarks, boy, you've been calling for a top for so long now. I've not been calling for an important top for so long now. What I've been telling you is that minimum upside projections have been reached. What you see here is a lot higher in terms of the upper upside projection, so it leaves a lot of room to go up higher. But when minimum upside projections are met for virtually everything, that's when you get very careful and start looking at your other indicators and say, we may be reaching some kind of top here. And when I say some kind of top, if we're reaching some kind of top with these valuations, we should treat every potential short-term top as a potential long-term top. Again, because of what's happening underneath the market, I don't think that's happening here. But let's keep our eye out, and we'll be doing these projections for you. Thanks so much for watching. I hope your day was better than mine, and we'll talk to you tomorrow. Subscribe if you haven't done it. Bottom right of the screen, you'll know if we do any special updates. Click on the bell, they'll let you know when our updates go online. Thanks for watching.